I, Jigar Devyjani, hereby grant permission to ICAPITAL Academy and Corporatory Advisory LLP to use the video presentation, PPT, assessment test, and MCQs created or provided by me for educational or promotional purposes. This includes publishing or sharing the content on their social media platforms, website, or through any other medium they deem appropriate. I confirm that I have no objection to such use. So this is the topic of presentation: bridging AI and finance, data science driven stock market insights with Excel modeling. So this is my internship presentation, which I had prepared in the July month, and I am presenting it towards the end of my internship duration with iCapital. So this is the agenda of the presentation today. The presentation mainly discusses about how AI, data science, Excel, and all other tools, how they are changing the world of finance. So here is how I like to start. What is financial modeling, first of all? So it is a structured process of building mathematical models, and they represent the financial performance of a business or asset. It is basically the quantitative representation of financial scenarios which are used for forecasting business or asset performance based on historical data plus assumptions, and they help us evaluate investment risk and returns. And here how they support strategic financial decision making. So what is Excel financial modeling? The Excel term basically, is like a tool which helps us to, model the, you can say, any type of assets. Maybe it can be a mutual fund, it can be a stock, it can be any company's balance sheet, it can be anything. So here is what it is. Excel is an industry standard tool for financial professions, and it helps us, integrate it with all other applications or CRM tools. Risk of rise of data-driven finance. So data-driven finance is a very booming industry. We all know that finance was always a booming industry, but then it came to a standstill when AI, data science, and all other fields are growing rapidly. So now combination of both these fields, it is a very great domain to work with. Importance of the stock market. We all know because of it, we are able to, judge the financial assets if they are deemed to be investable or not. So that is what the stock market is importance for this domain. Why predicting it matters? If we are able to predict it, then obviously we will be able to maximize returns and minimize losses. We can't go by those standard and old stereotype methods. We need to, make new methods. So for that, we can use obviously Excel. Then we can obviously create a financial model using machine learning and using any, tool like decision tree classifier, a random forest, any tool. Apart from that, we can also use ChatGPT to, find an algorithm which helps us do it more better way. Challenges, we all know about that. Then we have role of AI and ML in finance. As I said previously, we were not able to, find fraud detections and anomaly monitoring. Anyone can impersonate anyone, and maybe a scam or any fraud can happen. But in today's world, it's very difficult to do that. This happens because of AI, ML, and another field I would like to mention, cyber security, which is very crucial, for this. Now, data input and cleaning in Excel. We all know that data can be manipulated easily in Excel using text to columns, flash fill, remove duplicates. We can do any this kind of things and mainly clean the data so that it is able to give us instincts which are useful. So first topic of today would be mastering financial modeling in Excel. So Excel fundamentals we need to know. Then we need to know the advanced analytical techniques. Then we need to know the dynamic financial applications. And after that, obviously, beyond basic Excel, there are few limitations of Excel, like macros, plugins. And if we are known to that, we obviously need to go for more recent tools like Power BI or Tableau, or you would say any other tool like SQL if we are working with a very big database. And this is how, Excel looks like. In that you have worksheets, you have call referencing, you have formula bar, you have ribbons, tabs. The basic formulas are here, sum, average, count, which are aggregate functions, which are a daily usage. Then we have time value of money, like present value, future value, then NPR. This all helps when we are, investing any asset. We need to know what the returns are. So for that, this is a very crucial parameter, I would say. Apart from that, we have balance sheet, income statement, cash flow statement, interlinkages, which are very useful to, identify the financial performance, like in Q1, Q2, Q3, Q4. We need to know how this company, how this asset, how this is actually performing on paper. So for that, we need to do data input, cleaning, and visualization. Input, we all know we need to input the data into Excel. Then we need to clean it using trim, clean, text to columns, and apart from that, any other techniques. And apart from that, we'll need to, work on the visualization part, line charts, candlestick charts, or even the pie chart for the monopoly of the company if we need to find out that. Apart from that, we have forecasting techniques in Excel. Then we need to, find out optimization and financial ratios, liquidity, P, profitability, solvency, efficiency. These all ratios, because of them, we are able to find out if the current performance of the company is a laggard or is in a front from what it was 3 months, 6 months, or years back. Time value of money, NPV, IRR. These are the three main pillars I would like to say of any firm which we need to analyze. Key takeaways from this topic is obviously that we need to master Excel. Then not only use it for just data purposes, we should use it to make charts and graphs which are more visual in term, so that the people who don't know more financial terms, they are able to work on it and find detailed insights. So the next topic would be AI and ML in finance, a comprehensive guide. So AI, as we all know, it is a great field right now. It enables machines to simulate human intelligence, including learning, problem solving, and decision making. It is the broader concept of creating intelligent machines. Then ML is obviously a subset of AI. It basically helps to train the machines, and by training it, we can after that test it or use it to simulate or find out the patterns, and from that we can obviously find out some great insights. Then we have data science, the machine learning, AI, both of them are very greedy of data. So data science helps us to provide the data which both of the fields require. Why data matters in today's world? It is the new gold, we all know that, and it helps us to enhance accuracy, reduce risk, optimize performance. Supervised versus unsupervised learning. In supervised learning, we give the data in which we know the answer as well, we know the question as well. In unsupervised learning, we only give it the question, answer the model or the machine itself finds out. So basically in unsupervised learning, we need to more and more train it instead of testing it. In supervised learning, we need to test more. As we have trained on few data set, then we need to test them on a more amount of data set. Both have their own advantages and disadvantages, which we will discuss in later part of the PPT. We know all of these things. We are doing it for regression, classification, time series. Regression means to predict anything. Classification means to classify the data. And time series forecasting means forecast anything based on the time. Like in this time, this will work. After 1 year, maybe, enhance the, because with NPV, IRR, and other parameters, we find out that, yeah, this is this, that is that. So for that, time series forecasting is used. Then we have clustering, sentiment, neural networks, and deep learning. These all are our fields of AI, which we need to find out and use it according to our uses. Tools of the trade, Python and R. So we all know all AI, ML, NLP, everything, it works on Python and R. These are the two main fundamental languages, especially the Python has pandas for data manipulation, NumPy, SkyPy for the basically numerical operations, scikit-learn for machine learning. Apart from that, we have decision tree. Then we have a house prediction model basically. Apart from that, R also has some specialized packages for statistical learning, time series, and econometrics. AI in action. So predictive analysis, algorithm training, robo advisors. We all know these are the three terms which are gaining a huge traction in these days, and they are the new, you can say, gold or the finance mantra which people are going to use in the future. Apart from that, we need to mitigate risk and enhance security. Mitigating means just to ensure that the risk doesn't go above par the level it should be. So we manage the risk, we detect the fraud, we find out credit scoring and lending from this. Key takeaways from this topic would obviously be AI and ML are revolutionizing financial analysis, trading, and client services. Understanding core concepts like supervised and unsupervised learning is crucial. Python and R are essential tools for this. Ethical AI and explainability are critical for responsible development. So next topic for today is mastering financial data, acquisition to analysis. Demystifying financial data. financial data has stock prices, company financials, macroeconomic indicators, the microfinancial indicators, market sentiment, etc., etc. We need to find out what structured data is, what unstructured data is. We need to know the importance of clean data. The clean data is the thing which helps us in making decision more accurate and not in the frame like we make poor decision making. Key sources of financial data is obviously NSE, RBI, Yahoo Finance, Bloomberg, Refinitiv, Icon, Morningstar. For that, we need to do web scraping, APIs, Y Finance, Alpha Vantage, Quantum. The imperative of clean data. Ensuring accuracy, improving reliability, enhancing model performance are the three main things which we need to focus in clean data. Handling missing values in data. Common methods we have is imputation. Imputation means to estimate any value based on the upper or the lower values of it. We can do it by mean, median, mode, forward, backward fill, interpolation, and contextual considerations can also be done if the data is not resolved from the earlier methods. For that, we can do normalization, min-max scaling, standardization, log transformation, and differencing. Feature engineering. Lag features, volatility measures, technical indicators, moving averages. These are very important terms you need to find out for feature engineering. Advanced data preparation and validation. Correlation matrix. Correlation matrix finds out the relationship between two variables, or it can be more variables as well, like the opening price, closing price, or a P indicator. Anything can be included in that. Then we have interquartile range and Z-score, which comes from that only. Data splitting, as I said, train and test. For testing, we need 20% data. For training, we need 80% data. This reverses when we go from supervised to unsupervised, as both are different methods. What we can do for data modeling, we can either use CSV, Excel, or databases. We can use BI tools, SQL, Tableau, or any other tool which we are used to. Predicting stock markets and ML approach. Regression models, classification algorithms, time series analysis, deep learning with LSTMs are the four main things which we are going to discuss in this. Linear regression, we all know that linearly if the prices are going up like 10, 20, 30 for 1, 2, 3. So for 10, it will be 100. It's like that. Linearly, the price goes in a line chart format. Polynomial means x square minus x plus 2. Suppose it is a polynomial. So when the x value goes up, you can see from 5 till we go 400, the x value is going from 0 to, I guess, 100, 1000, 10,000. So polynomial in polynomial, what happens is, as the value of x increases, the value of polynomial increases tremendously. Advanced regression techniques, as I said, random forest, and there is also Ansible learning. We all know decision trees, support vector machines are also one of the main algorithms which we can use. KNN. KNN means suppose your neighbor left side is having 3, your next neighbor is having 5. So from that you can estimate that yes, your score is going to be 4. So that is the approach which we are going through when we are applying KNN algorithm. Then we have time series forecasting. As I said, ARIMA and Facebook Profit are two forms with which we can do it. Then we have deep learning with LSTMs, RMSE, CM, ROC. These are the terms through which we are evaluating the model performance which we had created. Then we have model deployment and integration. We can do it using cloud or any other parameters. Deploying means to help the society even use that tool and not just limited to 10, 20 people using it. Then we have next topic, automatic Excel with Python for financial analysis. So we have Excel and Python, a powerful synergy, as I said. Then we have automating data pulling with Python, APIs, libraries, and also pulling up data using web scraping, APIs, etc. We can find out data and then we can use it for predictions. Generating Excel reports from AI predictions. AI predictions can used again for generating Excel reports, and this loop can go on till the time we are not satisfied with the results. Python script to clean data for Excel. Python scripts helps us to clean data using any fill NA, drop NA, matplotlib, drop duplicates, etc. code. Scheduling Excel reports with Python. We can schedule like in this interval we need to do this, and this interval we can do this. Email automation is also a thing. We can obviously send automated emails like Excel reports to any person. Benefits of using this: enhanced efficiency, deeper insights, scalability, improved accuracy. Risk and best practices in automation: data integrity issues, dependency management, security vulnerabilities are still there. Best practices are using version control, Git, GitHub, error handling, try except blocks, secure credentials, API keys, using high encryption decryption, thorough testing. Key tools for Excel and AI integration: we have Excel, Wings, Pandas, TensorFlow, Anaconda, etc. Navigating AI ethics. So for that, we need to know bias. Sometimes the models can be biased on the things. Like if it identifies that this is the true thing, it is going to understand that only, and it is not going to understand it through prompts as well. So this is the thing which happens. Sometimes it understands that A word is A word, B word is C word. Then it understands that only. We can't change it. So that is the, you can say, shortcomings of the AI models which are still there. So types of bias, as I said, data bias, algorithm bias, user-driven bias can be there. Case studies, we have 2000 crash of foreign, actually. It was of NYIC. It was not purely AI. High frequency trading algorithms did it. Discrimination lending models, algorithm trading models, losses. What we can do is ensure transparency. For that, we need to open the models and tell our users that, see, this is what it is. It has bias. It has this. It has this. And in the meanwhile, by using R&D, improve that. Regulatory guidance we have from this all major companies. Ethical model deployment, fairness by design, continuous monitoring, stakeholder engagement, human oversight are the main features which we should look after. Building trustworthy AI for investment decisions is the main objective, obviously. Key takeaways are obviously this only: use the regulations, guidelines, and till that time, using R&D, try to train models for more higher efficiencies. AI's impact on finance careers. Quantitative analyst, data scientist, AI ML researcher are the new jobs coming out. Key skills for AI finance careers are strong programming skills, ML expertise, statistic modeling, financial domain knowledge, big data technologies, communication, and problem solving. What employees are looking for? Employees are looking for a person with more AI and ML skills till now. AI investment banking versus wealth management investment banking. AI investment banking versus wealth management. I just listed the differences which we can read. Then we have essential certification and skills which one should do. CFA, FRM, Python and ML courses, advanced Excel, doing AI courses are a great thing to start with. Building a practical edge through internships, as I'm doing one here. Future trends, human AI collaboration is the future which we should brace ourselves for. Key takeaways and next steps. AI is reshaping finance, creating new high demand roles. So we need to respect that and try to learn and develop more skills in that. Next steps is obviously the things listed. Generative AI in finance. Generative AI is, suppose we ask any prompt to AI and it generates content, data, predictive models. ChatGPT, as I said, the biggest model which we can use it. Then apart from that, we have positive sentiment, negative sentiment, neutral sentiment. Using that, automatic financial effectiveness and insights. Human plus Gen AI collaboration is a powerful synergy. Future of prompt engineering in fintech. Using Tableau and Power BI. Tableau and Power BI both are technically the visualization tools which we should apply for. And when we apply that, we actually help in people who don't understand jargon know about the things because the charts and graphs are very easier to understand and they help us find out easy decisions. Power BI dashboards, Tableau. Integrating both of them into Power BI is the main tool. KPI monitoring. KPI is key performance indicators, which are very useful parameters for identifying real time what is the data, what is the visualization tools are working like. Excel versus BI tools are there. Choosing between Tableau and Power BI. Tableau is used for advanced visuals and complex data blending. Power BI is used for Microsoft-centric environments and cost effectiveness. Conclusion: empowering finance with BI. Excel, Power Query, and Power Pivot. Power Query is listed here. Then we can import data from web or database. We can transform it using clean shape, merge append, automate refresh, custom columns. We can power pivot using data modeling, relationships, large data sets, fast aggregation. Tax functions for financial modeling, time intelligence, advanced calculations, simplified formulas are the things. Connecting Power BI to Power Pivot methods. Use case, multi-sector portfolio dashboard, data integration, Power Query transformation, Power Pivot modeling, real-time dashboard. Practical example highlights are automated P&L reports, dynamic gross margin percentage, interactive slices, reduce manual errors. Summary and benefits. Investor psychology and behavioral finance. What is behavioral finance? Behavioral finance is the thing which we think on the mind. We apply that only in the things, but it is not like that. We should, use irrational approaches to do that. Common biases is loss aversion, overconfidence. Other key biases is anchoring, herd mentality, confirmation biases. Impact on prediction models. Sentiment data and training. Data sources, methodology, prediction power. These are the things which we usually use it. Real examples are at dot-com bubble, 2008 global financial crisis, GameStop saga, in which the sentiments went low. Then we have the main Indian market scams as well, 1992, 2001. Recent IPO oversubscriptions are also there. Designing models that account for emotions, integrate sentiment data, anomaly detection, psychological variables, and several hybrid models. Conclusion, future of behavioral finance and AI. Building an end-to-end AI stock system. Collecting real-time data, API integration. Data preparation with Python. Ingestion, cleaning, feature engineering, normalization are the terms which we should do. Training ML models, LSTM networks, random forest are the two which are ideal. Model evaluation, we need to find out accuracy scores, mean absolute errors, Sharpe ratios. Exporting predictions to Excel. Creating auto-updating Excel dashboards. Scheduling predictions with Python. Limitations and final tips. Overfitting risk, market volatility, data quality. Quantitative portfolio management, a case study. Data preparation, cleaning and feature engineering. Data handling means just identifying missing values, outlier detection, data normalization. Feature engineering means creating moving averages, small time moving averages, easy moving averages, Bollinger Bands, calculating RSI and MACD, incorporating volume weighted average prices. Predicting modeling and accuracy metrics. Model selection, we employed a LSTM neural network due to its proficiency in processing sequential data like time series financial data. This model is ideal for capturing long-term dependence. Visualizing predictions and buy-sell signals. Excel model and dashboard integration. Risk versus return and backtesting. Advanced Excel analysis, what if and correlation. Portfolio optimization and rebalancing. Key learnings and next steps. AI in finance, transforming markets. AI in hedge funds and quantitative analysis. Hedging means to buy a buying thing and selling thing. So, doing two things together. So in any scenario, your losses are not more, your profits are not more. Quant analyst and data science. You can do this by using analyst of quant and data science. Bloomberg AI tools, Reuters AI applications can be used. The rise of AI-driven fintech, Zerotha, Grow, Cred, Paytm, these are the companies which are using it day to day. AI in personal finance and robo-advice. AI-powered platforms like Zerotha and Grow offer tailored investment advices, budget tracking, and financial goal setting. Robo-advisory means I utilize algorithms to automate investment management, including portfolio rebalancing, tax loss harvesting, and risk assessment. Advanced AI applications, portfolio management, risk assessment, high-frequency trading. Future frontier, blockchain, generative AI, and Excel. Ethical and regulatory challenges are still there. Key takeaway and next step, AI's ubiquity is no longer a niche tool, but a foundational element across all facets of finance. Adaptation is the key. Innovation and disruption are always there, but ethical oversight needs to be taken care of. AI and financial modeling, key insights and future directions. Key learnings from the internship which I have, enhanced AI understanding, advanced modeling skills, strategic application. Benefits of AI in financial modeling, enhanced accuracy, efficiency and automation, risk mitigation. Integrating Excel with AI, core modeling techniques, data manipulation, financial functions, sensitivity analysis, data quality and bias, interpretability, computational resources. These are the limitations. Suggested tools are obviously the same: Python libraries, RN packages, Coursera edX, Kaggle certifications are the things which we need to learn in education term. Literature can be any book. How this internship enhance my learning, practical application, industry exposure, networking and mentoring. Future works and research directions: explainable AI, reinforcement learning, ethical AI, climate risk modeling. Thank you. Any questions?